Hi everyone. The sell-off in NBFC stocks has been at the center of recent market fall. While higher rates were anticipated in FY19, most NBFCs were caught completely off guard on the liquidity crunch. The liquidity crunch was mainly triggered by the default of IL&FS group companies. The impact was also felt by debt mutual funds. As a result, their risk aversion increased, and also because of the huge redemption pressure, the questions are raised as to how NBFCs will meet their future funding needs. So why do we look into NBFCs considering the situation on the liquidity side? The first is, while the funding is constrained, we think that this is not a systemic crisis. We have already seen in the past such similar crises. In fact, in 2008, it was much worse during Lehman bankruptcy. In 2013 also, financial stocks plummeted because of macro concerns and also because of the sharper correction in rupee. Not only many NBFCs survived through this crisis, but they also flourished during these times. So we decided to have a look at the long list of NBFCs and have picked up two stocks. So we arrived at the two names, that is L&T Financial Holdings and Indostar Capital Finance, after considering the business fundamentals. Most importantly, we looked at the quantum and the quality of liquidity cushion as well as the parentage of these companies. So the first company that we discuss is L&T Financial Holdings. What do we like about this company? The most important reason is its strong parentage. L&T holds around 64% equity in the company, and which gives us a lot of comfort. L&T had already infused around 2,000 crore of capital in the business in Q4. Second, we like that the company is able to grow its business very profitably. And the third and the most important reason is that L&T Financial Holding is a niche player with a certain competitive advantage. It is able to source funds at a very cheaper rate as compared to the peer group because it enjoys IFC, that is Infrastructure Finance Company, and PFI, that is Public Financial Institution status. The next stock that we discuss today is Indostar Capital Finance. What do we like about the stock? Indostar Capital Finance got listed in May 2018, post which it could raise a capital of around 700 crores. As a result, the company's capital adequacy is very strong at around 30%. Now, given the very strong capital adequacy, it can raise funds from banks very easily. The second reason is the company's experienced management. It consists of professionals. For instance, Mr. Sridhar, who is the CEO of the company, has a long experience in financial services industry and was previously associated with Shriram Transport Finance. And last and not the least is the valuation is very compelling for Indostar Capital Finance. The company is trading at less than book. Its trailing book, that is FY18. In fact, from a long list of NBFCs that we looked at, it is the only company which is trading at below book value. So overall, we would like to conclude that the recent fall gives a lot of opportunity for the investors to buy from a long-term perspective, especially the investors who have slightly higher risk appetite. So, the NBFCs like HDFC Limited, which should form the part of the core portfolio, investors should additionally look at the new names like L&T Financial Holdings and Indostar Capital Finance. That's it from our side. Thanks.